Most were expecting slightly over 50. I mean, we're so close to that 53 level. Do you think these levels are sustainable?
Look, I certainly hope so. Good afternoon, Eleni. This is a great number. It shows that the manufacturing sector is recovering from the strikes that we've had in the automotive industry, but also the manufacturing sector is finding their feet in terms of the environment with a stronger rand, low interest rates, and it's good news. It's good news all around. If you look at the elements that are really strong, the subsectors, it's the current business activity, which is great to see that. It is the new orders, which are wonderful. That means looking forward, it's looking positive. And then purchasing commitments. Now, if you look at the number in the purchasing commitments, that's the highest we've seen for more than 3 years. So that shows you that there's slowly a strong underpin coming back into the manufacturing sector, which is a good news story.
Well, now sitting here with November's number, does that give you any perspective on the September and October numbers? And of course, we saw that big pullback in September. We had strike activity, we had the strong rand. Does that not put this into perspective?
I certainly think it does. I certainly think it does. It also means that the sector is recovering from the strike activities that we've seen. If you look at the leading indicator portion, and what we do there is we take the new orders and subtract the current inventory number from that. That's also up strongly, which shows us that even if the more you look forward, the more committed and more confidence there is in the sector, which is the good news. And I do think it puts the 2 months in perspective, and perhaps the strike had a bigger effect than we thought. Perhaps the aftermath of the World Cup had a big effect, and perhaps it took some time to adjust to the stronger rand.
Well, when you zoom into the numbers and looking at what is dragging the overall number down, we've got employment, which is sitting at 47.6, so below that 50 level. No surprise there. And then the backlog of sales orders at 42.2. When do you expect that to turn around?
Look, the employment number is the big negative, or the big disappointment. That's the 7th month in a row that we are seeing that the sector is not creating employment. It's actually shedding jobs. It is shrinking the job opportunities. We are just below 50, so it is looking stronger. If the current activity and the expected activity remains strong, you would find that over time, hopefully the sector will start to employ or start to create job opportunities, because it is a sector that is important for the job market. If you look at the backlog of sales orders and the inventory side, I do think there the element is the longer we have strong business activities, current business activities. If we can remain strong in the business activity, obviously that will work through the system, and over time that will come back into the positive. At this point in time, the big disappointment is the employment numbers, and I do believe that if the activity continues where we are currently, we will see better employment readings going forward.
Do you think we're going to be able to keep up this momentum, or do you think that November was really just a case of catch-up after those negative readings in September, October?
I think there is an element of catch-up, unfortunately, which means that probably the pace of the improvement will not continue. What this will mean is, if you look at the previous quarter, the last official quarter we have in terms of the manufacturing sector, quarter on quarter for the 3rd quarter, the manufacturing sector actually shrank by around about 5%, slightly more than that. We've seen 2 months reading into the new quarter, the 4th quarter. If this trend continues, I think that we will see that the sector as a whole, quarter on quarter, will be back into the positive. If this is a continuing trend, we certainly hope so. The signs are there, especially those elements that are forward-looking. The point, however, is, will the pace remain at the level above 50 that we're seeing the improvement? I don't think that will necessarily remain.
And of course, there was a lot of excitement in February when we saw the PMI number hitting around 60. Is that then a reality looking into 2011? Could we see those numbers?
Look, if you look at worldwide, PMI numbers are currently stronger than the market was expecting. Our big risk in terms of the manufacturing export is more towards Europe. That's where we export manufactured goods to, and obviously local demand. Now, those factors will play a role in terms of how strong the reading is going forward. I do think if you look back, the February 2010 number was a bit of an overreaction. It was a bit of a knee-jerk reaction, and perhaps it was a bit over-optimistic at that point in time. I'd rather see a strong number building towards the 60 level over a long period of time, creating the sector that is growing at a slower pace, but there's sustainability in the growth numbers, and see the subsector of employment starting to come back into the fray, because that is what we need in terms of the broader South African market. We need employment opportunities, and we need them in sectors that can actually employ a large number of people.
Of course, we had that great PMI number out of China. We also had the UK coming out with a PMI of 58, so much stronger than expected, because they had expected a small contraction. With the Chinese PMI, though, this now raises the risk of further monetary tightening, and people now worried that we could have interest rates going up up, which would have a negative impact on South Africa, wouldn't it?
Yes, it would. If you look at our exports, although China surpassed Europe as the biggest export destination for South African goods, our manufactured goods are still going to a lot of it goes to Europe, which means more of a Europe recovery from a manufacturing sector. But yes, if the Chinese economy were to start to slower growth, it will have an impact on our exports, specifically the commodity export going into China. But we must be careful. The Chinese growth is stronger than they would have liked to see. I think they have a kind of a target rate or a speed limit of 8%. And any growth that you're seeing towards 10, 11 or even higher than that is too high even for the Chinese economy.
We've also had India coming out with really good growth numbers and a good PMI today as well. So we keep on losing focus about India, which really is growing very strongly as well.
And remember, the PMI it tells you what's happening in the real economy. It is not necessarily the markets and not the expectation of the market. It is the expectation of the people in the real day-to-day economy. And perhaps one must look at that, and you must try to see if this worldwide strength in the underlying real economy, to what extent that will in the long run give us a bit more sustainable growth underpinned to the world economy.
And of course currency has a lot to do with it. You were saying that the South African manufacturers starting to find their feet, but it's still a race to see who's going to have the weakest currency. And now we see troubles coming through from Europe and the US, and a lot of pressure on China to further allow its currency to appreciate. Is that also going to be quite a telling factor going forward?
Yes, that will be. If the currency remains strong or strengthens from these levels, obviously you will have the impact on the manufacturing sector, and you'll have to have the necessary adjustment in the sector to be able to sustain a proper manufacturing base in a stronger currency. But I think if you look at the numbers that we have in front of us now, to a large extent, big portions of that sector has adapted to the stronger currency. Obviously, volatility is the one thing that will be negative, because you have to structure yourself in terms of being competitive in a volatile currency environment. At this point in time, it seems that the sector is coping with a strong currency.
And of course, for much of November, we had the rand trading below 7 rand against the dollar. So we had it down as strong as 680, and they still managed to grow manufacturing like this.
Yes, I think that's the good news, and that means there is efficiencies. We are competing in the sector, and one would hope that would continue.